Pharmaceuticals. Let's really gauge what are the prospects of the sector right now. And, domestic sales, it seems, are surging amid rising COVID cases once again. Let's bring on board A Vaidheesh. He joins in right now on the show, and we also have with us Aditya Khemka joining in. Chairman, hi, good morning. Great to have you both on the show. Vaidheesh, if I could just start off with you, domestic pharma seems to be on the uptake with, the rising flu as well as now COVID cases also, unfortunately. Do you sense that once again we could see that 2020 kind of growth spurt?
But I'm not surprised because these are all the flu season and infection season. So what you are seeing, of course, with Corona behind us, and now it looks like Corona is climbing up, but I'm not too sure that will continue. But I'm not surprised. This infection season, GI season, is all very seasonal, and Indian pharma market will continue to have this kind of growth. It may not be as much 20 and that kind of stuff, but 12 to 14%, one should expect.
Interesting. Aditya, you must be doing all the numbers right now. Help us understand, with COVID cases now rising, do you expect sales of domestic products to actually go up?
So no, when we do our numbers for the quarter, we haven't really considered any COVID-related sales to jump up. We understand that COVID cases have been rising off late in the country and in certain specific states. But we don't feel that a majority of these cases would require significant medication. At least we don't have any indication as of now that they would. And it could be a more benign wave like Omicron was. And it may not result in significant sales for pharmaceutical companies, maybe for a little for hospitals and a little for diagnostics, if at all. But I don't think pharma companies in this wave, or at least we don't expect as of now that pharma companies in this wave would have any significant COVID-related revenues.
Mr. Vaidheesh, we were chatting with the Cipla management, and they told us earlier that post-COVID growth for branded medicines are actually up. And, you are seeing a bump up when it comes to Tier 4 and other cities as well, outside of the Tier 1 and Tier 2 metros. Do you see the market share of branded sales in India actually increasing?
Yeah, sure. Because you need to take into consideration the context during the Corona time. I think people were awareness for good quality brands, awareness for taking the right kind of medicines has gone up significantly. So today, if any company does a good job of building the brand, make sure the qualities are delivered to the physician, I would say the branded generic is here to stay. I fully agree with supply management what they say. I would continue to see a good growth for all the good branded generic, companies which has invested behind building the brands and building quality.
Aditya, since we have you with us, I also wanted to understand where you see the US generic cycle actually, and what is it that you're looking for when it comes to the fourth quarter numbers, because the commentary would start trickling in now.
Yeah, so we don't expect the US generic to be a great quarter this quarter. Last quarter in the US generic, which is third quarter, December ending quarter, there was a strong flu season in US. And Revlimid as a generic product impacted the sales of many of these pharma companies, which have a quasi-exclusive window in Revlimid in the US market, which can continue for the next 2-3 years, given that the patent actually expires in 2026. US generic will not be incremental growth sequentially from 3Q to 4Q for most of the companies. They will actually have flat or declining quarters. And over a long term, I think structurally also, we don't see US generics being extremely profitable or a high growth area for these pharma companies, simply because in that market today, the supply is significantly higher than demand and pricing is immensely difficult. So there is a lot of pricing pressure on the products, and margins are also under pressure. And there are no significant sole exclusivities coming up in the next 1 or 2 years. So we don't feel that from here the US generic business will show any significant growth for majority of the pharma companies.
Okay, but Aditya, costs as well are coming down. Wouldn't that provide some amount of comfort to margins?
So see, you have on one end you have the US generic business where the raw material cost decline will obviously help the margins, but you would also have some pricing deflation, which is normally called pricing pressure in the US. So the margin that we'll get to see in the fourth quarter will be a net impact of how much raw material cost has declined and how much end product prices have declined. Whereas if you look at the India focused companies, there the end product prices have gone up and the raw material prices are declining. So the margin therefore will definitely look better because you have an end product price which is going up and you have a raw material cost which is coming down. Versus US generics where both will come down. So then it will be a net impact of which comes down more, the price or the raw material cost.
Right. Mr. Vaidheesh, given that COVID seems to be on the back again, given that there is the flu season in any case, which is prevalent, and, to add to that, there's so much construction happening in metros that, the AQI levels in any case are bringing about a lot of respiratory diseases as well. Given that the Indian pharma market right now is only 30% of the domestic market when it comes to anti-infectives, respiratory, or for that matter, pain medicines, do you sense that tactically perhaps Indian pharma majors are going to try and broaden this market share and, penetrate deeper when it comes to these categories?
Yeah, no, but you're right. Definitely, the respiratory illnesses are on the rise. I do know that a couple of companies have invested behind respiratory, but it's definitely a good time for companies to start broaden their portfolio. And respiratory is not just only one medication. There are varied types of illness that comes along with the respiratory, either it's an asthma related or it's a allergic induced. There are childhood respiratory illness. There are a lot big areas. I do believe that this is a very big opportunity, which I'm quite sure most of the companies must be currently working on it anyway.
Okay, morning, and Mr. Vaidheesh, wanted to get in your take, given the fact that we've seen a lot of deals that have taken place in the pharma as well as healthcare space. Do you think that this deal momentum is going to continue? Are you expecting any investment in, new therapy of pharma from existing players to really move up the value chain?
Yeah, well, the deals are happening. But in my opinion, at the end of the day, the deals are primarily consolidation is to improve efficiency and scale. I do see an opportunity in the area of provider space that has happened in the hospital space. I do see something has to happen in the insurance space. As far as the pharma is concerned, in the formulation area, frankly, the deals, there are so many companies are out there. For you to consolidate and identify deals have to happen by selectively based on the kind of brands, more a brand-based deals rather than a company-based deals. But however, there are deals can happen in the area of back-end operations of an R&D or the R&D space or in the API space. Those are the areas where India is gaining strength, getting good support from the government. So I do see interesting things happening in the pharma value chain.
Right. Aditya, just one final question. Given that in the year gone by, or for that matter, even now, some of the best pharma or other best performing pharma companies, stock specific wise or stock performance wise, have been the likes of DRL and Cipla. Wanted to understand what your pecking order is within pharma, and especially in light of the earnings coming up next.
Yeah, so actually, I would slightly point out to your question that DRL and Cipla may be the best performing stocks as long as you look at the top 10 pharma companies. If you go down the ladder further, I mean, there are many other stocks which have performed significantly better than DRL and Cipla both. And these are companies which, in my mind, the way we look at them, we call them branded generic companies because they are more focused on India, they're more focused on emerging markets, and they have the ability to increase prices in an environment where raw material costs are going up. So definitely their stocks have done better, and their stocks will continue to do better. That's how we look at it. Coming to what we feel about the coming year, I think we do feel that there will be earnings growth because for the last 3 years now, the top line growth in pharma has been about 11 to 12% CAGR, but the EBITDA growth has been only 2% CAGR, and the PAT growth is flat. So therefore, coming year, if the costs do roll back, then you would have 11-12% top line growth, but you can have potentially a 20-25% EBITDA growth and a 35-40% PAT growth. Even if these numbers do materialize, over a 3-year period, your top line CAGR would be 11-12%, EBITDA CAGR will be 10%, and PAT CAGR will be 9%.
All right, gentlemen, thank you so much for taking time out and giving us a clearer picture of the M&A activity that we've seen in the pharma space, domestic sales, and how cost pressures as well are shaping up for the pharma sector as a whole.